Can you hear me? Yeah, yeah. Hi everyone, and welcome to this afternoon's webinar, and thank you for your patience, just waiting for David to log in. There was a little bit of a glitch on his system. Right, I'm getting echo, darling. Are you turned on as well? Are you off? Oh, okay, fine. Hopefully the sound comes through okay. I asked this morning if you could hear us all right. Could I just, oh, fantastic. Thank you, Sam. That's brilliant. Thank you so much. Right. Before we start, may I just draw your attention to the disclaimer that's on the screen? I know you've seen this many, many times before, but please, please don't ever think of trading with money that you cannot afford to lose. So I'll just take that down a second. And very, very quickly before we start, for those of you who are coming along for the first time, in this session, we will be looking at the concepts behind day trading, and in particular the indices using volume price analysis. And here are the details of all the books that are on Amazon. This is on Amazon.com, but they're available on other Amazon stores from your part of the world if you have Amazon. And there's all the principles that are outlined in the book that you can see, the complete guide. And there's also, to the complete guide, there is now actually a companion with worked examples, because it was one of the things that I was always being asked for. You know, it's great, but could you just sort of illustrate it a little bit more? And there's over 200 examples. There are stocks there, but it does also cover the indices and some commodities as well. And these are the other books that to cover the other markets. There's Forex, cryptos, and even I think there's binary options as well. Really, really highlighting that the methodology that David and I have used in our own trading for the last 20 odd years or so can really be applied pretty much across the markets and pretty much, well, across all the time frames as well. If you were with us this morning, we were obviously looking at Forex and we were looking at reversals. I was looking at the pound Aussie, which is very overbought on the heat map indicator that we use, and I was waiting for a fall in that. It actually hasn't happened. It has actually gone up even more, primarily because it's very much risk off today. It's market's not in a very good mood, and this has been reflected in what we can see in the indices. And what I've pulled up here is we tend to go over to David's screen, because when David and I look at the indices for our own trading, in particular David, we do use the NinjaTrader platform, but you can trade the indices on MT4, MT5. A lot of brokers offer the instruments not as a pure futures instrument, but it's a CFD, it's a derivative, as it were. The pricing will be pretty close to what's in the futures market. The price action, again, will mirror it fairly closely. Some of the indicators, for example, the VPOC may not be in exactly the same place. So, there's going to be a little bit of, you have to allow a little bit of leeway. But if you're on, to be honest, we can see the difference because we have both platforms. Most traders only, stick with one, as it were. And the workspace that I have here is similar to what's on NinjaTrader. I have a Renko. This is the version that we have for MT5, as we can see here. And this is a sort of a non-time-based chart just to help with entries, exits, and seeing some kind of momentum in the move. And in fact, having said that, we've had this nice move down from the volume point of control. This is obviously where we see the volume coming in as the US session gets underway. This represents what Globex is, and you can see, because there's not so much liquidity, all these volume bars then get reduced as the US market opens, and there's an inrush of activity. It doesn't invalidate trading Globex. It doesn't invalidate the volume price methodology, volume price analysis methodology. We just have to be aware that volume, as I said, you have to take it in context, especially in 24-hour markets, to the session currently being traded. And we had an inrush of volume, lots of volatilities. We can see volatility on this candle, volatility on that candle, but still around the VPOC, really, all this volatility not going anywhere until we had this this nice move lower with nice volume, big widespread down candles, and now we've had a pause here. We know there's some buying coming in. We've got wicks to the bottom of that candle. We also had a wick to the bottom of this candle, but it wasn't sufficient to stop the price from falling. This one did, much deeper wick, much higher volume. This is what you need. You need to see volume, not only to move the move either forward or downwards, but you also need an inrush of buying, of support to actually stop what we call stopping volume. And this is what you're seeing here, because you've got a wick to the bottom and you've got higher volume as well. And we've got a little, it looks like a reversal, but it's really only just gone back to the VPOC. 24.5, I've got 24,551, 550. It's a nice round number. Hopefully we will actually get some movement today. If you were with us last week, David will explain a little bit more. We've really not a lot going on. Then of course, as soon as we stopped, it actually did take off, darling, didn't it? It was very good, yes. And it was one of those where it was patience was required. The kind of feel and the indicators and the price action and the volume all kind of led us to anticipate that it would be to the upside, and that's what happened. And I'll talk a little bit more about when you become a trader. It's not only looking at your charts, having a feel for what the broader market sentiment is. Is it a bit sour? Is it more positive? What's coming in on fundamental news? This is on an intraday basis. But you soon get together, as I said, you develop this feel for the market, and it's something. I was talking about it yesterday at an event that I was up in the city of London, and I was talking to a guy who runs a fund, and he was saying it's something not that you can't teach, and he was trying to explain what he says to his traders and how he tries to get over this, because you can read a chart, you can have all the macro data that you have, but ultimately you've got to put it all together. And what is it that tells you what is going to happen, likely to happen next? Well, volume price analysis will do that, pretty much for you. But at the same time, you've got to bring in the other strands, the context of what is happening on the chart at the moment. And it was really, really interesting. And we were talking about it. How can you do this? And is it logic? Is it it's creative? It's more artistic. And it also has a huge impact on whether you are a discretionary trader or a systematic trader, and your personality and what makes you feel most comfortable. Because trying to make sense of what you see on the chart and then going in and taking a position based on feelings, if you like, it's very it's very difficult, and some people feel really uncomfortable. And you say, well, hold on a minute, this is all maths, this is logic. Tell me, I just want to know when I want to get in, how long I stay in, and when I get out. And in fact, as Sam said, and the feel is the key. And it's the feel of it is like the poker table. It's exactly like that, and it's that extra element that you need in trading. David and I, as I said, really believe that VPA at least will take you part of the way. Do you agree, David? Fine, right, fantastic. Right, I'm just going to say, let David get a word in edgeways.
Hello, everyone. Very warm welcome, and great to have you join us today. And I have to say, so we've got my microphone's dropped a little bit. There we go. We have the first snow of winter here, so if it's nice and warm where you are, enjoy, because it's fairly cold here in the UK at the moment. So there we go. If it's your first time coming along, a very warm welcome. I know we've got some regulars in the room as well, which is lovely. If you have any questions, just drop them in the chat box and we'll answer them there. But if they're longer questions, more complicated, we'll answer them on air for you as well. Just to pick up on what Anna was saying about, because because there's not a lot going on at the moment. We're trading around the volume point of control, a little bit like we were last week, but I've just got an eye on it over here. Just to pick up on what Anna was saying about instinct and emotion, and it's almost gut. When you've been doing this for a long, long time, you do start to develop a feeling of market direction, and it's very hard to teach that. And I guess it probably comes from years and years and years of watching candles building in real time. Probably somewhere in the subconscious, maybe buried deep in the memory bank somewhere, there's a whole raft of patterns, pattern recognition, all that sort of stuff going on. But the more you do this, you do develop a sense of market direction, a sense of sentiment, purely through looking at the chart. And it's really only something that develops over time. It's not something you can teach. You'll probably recognize it when it happens to you for the first or second time, and you'll just get that sort of slight sort of feeling from your stomach that, you know, this is the right thing to do. It's very hard to describe. That's the only way I can describe it. It's almost like sort of butterflies in the stomach. You think, yeah, okay. It's a little bit like making a business decision, or really a decision about anything. You have a gut feeling that it's the right thing to do, and it does apply to the markets as well. So I just wanted, that's my 2 penneth worth, and I think it only comes with time. The longer you sit watching charts, trading, gradually it will develop, it will come, and when you've reached that point, that's the point at which you've kind of crossed the I was going to say the Rubicon. That's not the right term to use, but you know what I mean. You've actually moved up to that level of expertise where, yes, you have all the technical abilities, you have all the tools, but you also add that sort of dimension that is almost impossible to frame, which is this instinct for market direction. Very warm welcome to you, Philippe, from Brazil. Warm welcome. I'm sure it's warmer there than it is here, and great to have you join us today. Let me just pass back to Anna. I've just got an eye on I've got the NinjaTrader running here. Just got an eye on it. We're sort of trading around the volume point of control from the open. But let me pass back to Anna, and then maybe we'll switch screens.
I've just got this is the daily chart for this is the version of the Dow of the YM. It's the US. They're called the US. What am I looking at? I'm looking at the wrong one. I'm looking at the cash. I'm on the NQ.
Yeah, you're on the NQ.
I'm on the NQ. I do beg your pardon. I'm on the NQ. I put up the wrong profile. Just to have a feel for what's happening on the daily. As you can see here, yesterday we had that little down candle. The volume is really, really low, and you know, mainly sort of. It's partly very much a reaction to the news on China, and it's in fact one of the Chinese news was the trigger for myself to close out a bunch of positions that I had in the forex market, and the positions were all really biased to a more positive view of sentiment. It was I was buying the Canadian and I was buying the Aussie as well, so 2 commodity currencies, and I knew by Friday, because I held the positions over a number of days, that this news was coming up at the weekend. Can you hear me, David? David, yeah. Can you still hear me?
Yeah.
Yeah, okay. That's something, the audio's, the headphones have gone a bit about to skew, but never mind. With this Chinese data coming in, I was very conscious that if it did come in much weaker than expected, and I really didn't want to be holding, certainly over the weekend. And in fact, that's what we see. This was the reaction that we had yesterday and the excuse that was given. But there's not a lot of selling pressure underneath that, given the, the volume profile under here. But I have to look at the volume profile also over on Ninja, just to see how that compares. I think, if you've got the YM, David, you'll be looking at the Dow. If David's got them all up anyway. It kind of followed through today as well, slightly more than yesterday. So whether the selling pressure is going to increase, again, really going to have to say, as a day trader, you really don't care whether it's going to go up or it's going to go down. You just want to be on the right side of the move that we see at the moment. And with the Camarilla indicator that we have here, it just gives us those levels. The levels for the daily, let's have a look on the hourly chart, that's better. We can see here the level that it's bounced off here, bounced off, oh, I know what, oh gosh, I didn't know, I think I had the wrong, oh, my fault, not to worry. We've got here is the S3, which is 6690, 6667 basically, very, very close to a zero. We see the buying coming in here now, and we'll just see what develops, or whether, you know, it's going to be like last week. We have a lot of rotation in consolidation around the volume point of control before we have a firm direction one way or another. And just very, very quickly on the news front, I know there's been some housing data, I believe. Let's have a look here. Existing home sales, yes, came in much lower than expected, but that's it for the US. There's nothing else, and we go back to this New Zealand, but later. So really, once that's out of the way and the market has absorbed it, we'll see what happens. I'll pass over to you, Donnie. Is that all right?
Yeah.
I must change screens as well. I'll go and sort out that profile.
Just changing screens. There we go. Should be coming up now. Should have my NinjaTrader screens up. Yes? Yeah. Great. Okay, I think we're up. Yeah.
Sorry, I was going to say, I don't know what happened to the raincoat, but I am actually on the down here.
Right, Anna had a technical problem on one of her charts. Not a problem. Usual technical issues. We have them all the time. Trading is very straightforward. Dealing with technical issues is not. Right. We're just on the time-based charts. I've got the tick charts running as well. Just on the time-based charts, just to get started. And top row, we've got I've got all three indices here. Top left, I've got the YM, which is the futures contract for the Dow 30. I've got the ES in the middle, and I've got the NQ. The ES is the S&P 500, and over on the right-hand side, I've got the NQ, the Nasdaq 100, and they are all running on the March contract for 2019. And then down at the bottom, I've got the daily chart for all three, which gives you perspective on where we are at the moment. Market's trying to rally. We're moving back towards the volume point of control. This is the ES. As far as the ES is concerned, over the last few days, we've had gently rising volume with rising price action, which is fine. But we're now starting to move back into these pretty deep regions of not only volume, resistance, trading around the volume point of control, which is this yellow line, which is the fulcrum of the market. So there's a huge amount of volume concentrated at a level, the heaviest volume on the daily time frame. And then above that, we've got very strong levels of resistance up here, which you can see, which define this price ceiling which has been created. So there's lots for the indices to battle their way through, and they're all pretty much the same. That's the YM. Again, we've got the volume point of control here. We're trying to battle our way through this very heavy area of volume. We've got price over here as well. We've got a very heavy ceiling of resistance above. So at the moment, in terms of the volume profile, I have to say it looks a little bit lightweight in terms of developing this trend further. Certainly over the last few days, that volume is not huge. It would be nice to see it, this sort of level. And, comparing it over here with last year, this is December. This is January, this is the start of the new year, this is through the Christmas period through here. But in terms of volume, the volume looks a little bit light. So for this rally to continue, it'd be nice to see some up days where we've got some really strong volume driving into the market. There's still an awful lot of uncertainty around US equities in particular, despite what may or may not have been agreed in terms of trade wars and tariffs and all the rest of it. There is still a certain amount of nervousness. And in addition to that, it's also tied into what is going on with the Fed, how they're like to react this year, and whether they're going to cool in terms of their rhetoric and also in terms of their decision making. Much will depend on that also. What was classic about the open, and all pretty much the same, the reason I've said this last week and I've said it before, when you're trading indices, then you're looking for related markets, and a classic related market is clearly the other indices. It'll give you a slightly different perspective on price, it'll give you a slightly different perspective on volume, because all three should, generally speaking, be running in parallel with one another, more or less going in the same direction. Not always the case. Occasionally you get days where maybe the NASDAQ will rise and perhaps the YM will fall, but generally speaking, you expect to see them moving in pretty much the same range and travel direction. But we saw the usual, whenever this market opens at 2:30 our time, or whatever time it is for you in the world, you're going to see volatility. You're going to see the inrush of volume. You're going to see the whipsawing around as that volume enters the market, particularly on indices such as the ES. You're going to see all the EAs kick in because they're all trading at this time of day. When the markets are running, both the cash and the futures market are running in parallel, you are going to see the EAs in there heavily, particularly in the ES, which is the most heavily traded of all. So you're going to see extreme volatility. We talked about reversals this morning in the London Forex session. It's exactly the same here. You're not only will you see reversals as the US session kicks in, but you'll also see strong reversals as these markets get underway. This was a classic trap move here. We saw it on all three charts. Volatility is triggered. Quick move to the downside. Everyone jumps in going short, thinks the market's going to collapse. Trapped at the bottom. Market trades inside, strongly reverses. Now we're back up to the volume point of control. Is it a market to be trading right now? No. I'm not interested in this market right now until it develops some direction. There's certainly no direction at the moment at all. The same is true on, this is the ES, the middle one. There we go. Again, we're trading around the volume point of control. Again, we had the volatility trap. That was, what was it, just about an hour after the open. Move to the downside. That's not to say there aren't points to be taken out of the market. There are always points to be taken depending on your degree of risk. But it's not, something I would have been interested in right now. I'm waiting for a stronger move and something that's defined with a volume and where the price action has moved either strongly away from something like the volume point of control or has moved firmly through a strong area such as this, where you've got a platform and then you've got some protection in place should the market reverse against you. There's all sorts of decision criteria depending on what the market's doing. Exactly the same on the NQ. We're trading around the volume point of control, and we're not going anywhere at the moment. Lots of volatility, no great direction. In terms of, let's just pop that down. Let's just go back on to the ES. Here we go. It's just a question of being patient. It's exactly the same as last week. It's just a question of being patient. The other thing I'd also point out is this, and I've taken flack for saying this in the past, but it's actually what I believe is true, in that, and it's something I do myself anyway, in that in many ways I actually prefer trading in Globex alone in this market here, for the simple reason that the price action is more measured, it's more even paced, and it lacks the volatility that we're seeing right now. A lot of traders will tell you that's incorrect. It's not the right way to trade these markets. You should be trading them when both the cash market and the futures market are running in parallel. It's a personal decision. It's just a point of view. All I can tell you is that the price action, and you can see it for yourself, this is much more measured, much more even paced. Forget about the fact that the volume is almost infinitesimal. It's only small because it's been squashed by what has gone on at the open here. I can assure you it's perfectly valid, works in exactly the same way, because all volume is comparative, and it's just simply a case that the volume here has rushed in. We've had a huge influx, and it's just simply compressed the volume that was going on earlier on Globex. But you can just eyeball the price action. You can see how relatively smooth it is. Yes, we get volatility from time to time. Of course you do. You get volatility when Chinese data comes out, for example, overnight our time, trading this through the morning. But the actual price action itself is far more measured and far more even paced. So if anyone says you can only trade this market when both are running in parallel, I have to say it also opens up the opportunity wherever you are in the world with the true 24-hour cycle. You can actually trade Globex quite happily, and obviously not just indices, you can trade commodities, whatever else is trading on Globex. Just pop that down, see what's going on in the other one. NQ pretty much doing the same. No great direction at the moment. And it's very easy when you see that, I think it was this candle here which was forming as I was talking. You see that the candle moves quickly and you think, oh, great, here's a move, and you want to jump in. Until you get some direction into this, you just have to sit on your hands and wait. It's, none of us are very good at patience, I'm afraid. But it's a fact of life. We just have to wait and wait and wait and wait for the trades to come to us and not try and force trades all the time. Let me just squeeze that. Let's just pull some more price action in here. Just to give some perspective on levels. I mean, if we were going to the upside in terms of price action, then, I'd be looking up at this sort of level here. Let's just pull that down a bit. There we go. Because if we could battle through this lot here, you've got an awful lot, you've got a lot of volume in here, you've got lots of price resistance on the accumulation distribution here, you've got a ton of it here, you've got another layer here, you've got a thinner layer here of potential resistance to any move higher. But if it manages to break through that lot and it breaks through with volume, then all well and good, and be looking at a decent trading opportunity. To the downside, probably a little bit more difficult. Let's just increase the time. Let's push that up to 15 maybe. Just pull that out, just to get a different perspective on time. And it's another reason, it's very straightforward to change time frames, obviously, but you actually want to see this running all the time in real time, just so you get a perspective on the price action across the time horizons. Lots of volatility, lots of trading around the volume point of control. But again, it gives you a sense of where you might be looking to get in. You might be looking above this level here, for example, because we've got volume falling away on the histogram, on the volume point of control. So the fall away in volume would actually help us to see the price action develop, but then we've got some pretty stiff price resistance at this region. So then it's a question of deciding, well, if I get in here, is this points move sufficient for me to take a position in the market? I mean, that's from 24,570 up to 30 points. Is that enough? It may or may not be. You might be looking for 40 or 50 points, which is more the sort of range I personally look for when I'm trading the YM. So when you look at the price chart, you've got to try and figure out for yourself, if I get into this, first of all, where am I going to get in? What am I looking at in terms of getting in? And if I do decide to get in at that level, where is that position likely to run into difficulty from a chart perspective, from a price-based perspective, either from resistance, price resistance, or volume resistance, one or the other, or both? And if you've got both, then ain't going to trade it. But if you've got what you're comfortable with in terms of 20, 30, 40 points as relatively clear water above that position, then that's a position that you might consider. And that's the sort of the decision-making criteria that goes on all the time. Just pop that back to 5. Let's just pop that down a minute. Let's go over onto. These are the daily. Let me hop over onto the tick charts. There we go. Let's just move that out of the way. We're on the ES again here, and these are pretty sluggish. I'll just update these. This is running at 1597. Okay, change that one over. This is at 4181, and the 5-minute is very sluggish indeed. That's even slower. 2584. There we go. Okay, and I've got the tick running here. And this is running on 7 at the moment, which is 1 3/4, so it's 7 ticks basically. And this is the tick speedometer, which delivers the tick setting for these 3 tick charts, which I've got here, the top 2 and the one at the bottom. And then you've got the Renko, which just gives a different perspective on a non-time-based chart, which is what this workspace is really all about. There's no aspect of time here other than over here, which is delivering the tick speed setting for the associated time-based charts. I've got a 1 minute, a 3 minute, and a 5 minute here. And at the moment, we're flip-flopping around, relatively low tick activity, in fact, very low tick activity for the ES. This number here should be up around 5, 6, 7,000. This should be around 10. This might go up to 15 on a busy day, maybe even 20,000 sometimes. Way, way, way above what you'll ever see on the YM, for example. The markets still have and I said it last week, they've got this bullish sentiment right now. There's a desire to move higher, but it's finding it a struggle. And it's almost precisely the same as last week from memory, where there is a desire to move higher. There is that effort to crawl up this wall, but it's really hard going. It's not moving with any great speed. And trading it is difficult because you are going to get jerky moves, you're going to get fast moves, then a reversal, then a pause, then maybe a little bit higher, and then comes down again. There's no smooth price action. This is not a strong trend right now. It's just a question of waiting and being patient. All right, this has now gone up to 6765, so we'll just push that one up. Start to see the tick activity building again. What we want to see is this green. We want to see activity. This is where the tick activity is high. Red is where it's pretty dormant. You can see it here. Absolutely tiny amount of tick activity coming through there, and you expect the markets to pause to go into congestion. You either want to see it running in orange, where it's the average, the norm, if you will, for tick speed, or you want to see the green areas where we're seeing high activity coming into the market. But we're still running pretty sluggish. We've got 1597, 4181, and 6765. Yep. Yeah, that's fine. Oh, my Renko needs updating. Do that in a minute. Let's just go back to the time-based charts. Okay, there. And almost exactly the same as last week. Apologies, folks. We do like to see trends developing, but the market doesn't always deliver them.
I think we'll do it later next week.
Yeah, we may move this session to a little bit later, and let the sort of first hour go through, and then not always. You can't guarantee that that will happen. It often does, but then sometimes it doesn't. So it's just a question of being patient. Just pull that 5-minute one up again. Go back to the YM. What's interesting from a volume perspective is that, beg pardon. There we go. It's not a bad way to start reading the chart, because you start to pick up all the nuances. And when you look at this, for example, you've got, albeit it's 2 candles, but you've got volume falling away. So what is that telling you? Well, it's telling you that the selling pressure isn't there. If there were real, true selling pressure, if this market was going to sell off big time, then you'd see a lot more volume associated with this down candle than this. You wouldn't see two candles down and falling volume. You'd at least see some rising volume there of an increase in selling pressure. The sales are coming into the market, they're driving the market lower, and you're seeing decent spreads as the price action develops. You've seen the market fall away in terms of volume. So from a volume point of a volume price analysis perspective, really what that's signaling is that there is very little in the way of selling pressure. Now, equally at the same time, there's very little interest in buying either. And if you go and look at the candles over here, for example, you get a big widespread candle. This volume looks a little bit lightweight, and it's not terribly strong. So this candle is not identical, but it just gives you a sense. As I said this morning, you've got to look for benchmarks all the time. The volume we can compare is in this region here. This is where we start, 2:30 our time. So you're constantly looking at these volume bars to try and pick off benchmarks, which is very difficult when you've got all this spiky price action going on. But you're always looking for sort of benchmark candles that you can say, yep, okay, that's my benchmark. Let's see how this one measures up against it. Is it average? Is it correct? Is it an anomaly? What is it? Etc. etc. So you're doing this all the time on one candle, on groups of candles. But I come back to it at the moment. We've got the volume point of control here. And is it any wonder that we're not trading out of that right now? And until the volume picks up, and basically what's happening here is we've got price agreement defined loosely, if you will, through market profile, which is where this comes from, in that there's no strong bias one way or the other. So the fulcrum of the market is pivoting around the volume point of control. It's like a seesaw. It's a seesaw with two people of equal weight on either side. So it ain't going to move until one of those people gets off and a heavier person gets on one side or a lighter person gets on the other. Then you will start to see direction. But at the moment, we're not. It's just trading around that region where the market is not going to push it one way or the other. It will when volume increases, and that's when you start to see the opportunities develop. But for the time being, they're not. Probably the same on the other charts as well. Similar sort of drop-off in volume here. We had the price action moved in the downside. Volume really falling away quite dramatically. Attempt to rally, big wick to the upside, but trading around this region still. And the same on the NQ. Similar picture there. Volume's falling away, trading around the volume point of control. You've got a half decent floor building here. You've got some light volume here. If it's going to break to the downside, you might think that from a trading perspective, that is an opportunity to get into the market. You'll be looking at this on different time frames, obviously. Let's put that up on 10, see what it looks like there. There we go. Very spiky. Not a particularly strong floor built there, but may do over time. Let's go up to 15. Every single time frame tells you something about that particular chart and what it is you're trying to do, which is why you need to have multiple time frames, whether that's the indicators, whether it's the charts, whether you're using tick charts in multiple arrays, whatever it is, doesn't matter. You need to have multiple time frames. Let's put it back to 5 so they're all consistent. Let's drop that out of the way. There we go. And you always have the daily for context. That's where we are in terms of the NQ. The NQ actually is the closest, I think, to its volume point of control. I think the others are, that's not far away. Let's have a look at the YM. Yeah, the YM's got a little bit further to go, but they're all approaching this region of heavy concentration of volume and the fulcrum of the market and all that entails. Just go and see what the currency indices are doing. I've got the yen index here, I've got the dollar index in the middle, and I've got the euro index over here. These are all on 5 minute. Let's see what the yen's doing. And the yen will always give you a heads up in terms of sentiment. And if this starts to break to the downside, in other words, yen selling in any great momentum, then that should be reflected in terms of the indices starting to rally. But again, it's pretty sluggish. Dollar's selling off a bit. That should help. And the euro's had a bit of a rally, has now rolled over again. Let's go back to the tick charts. And you can see, maybe you can't see, but the tick activity down here on 5, whereas when we were here last time was at 6765, nearly 7,000. We're now down at the 2526. So it just gives you an indication of how quiet this market is right now, the lack of participation, the lack of activity. It's just not there. And that's why we're seeing this lack of market direction right now. And until this tick activity picks up, and we see the volume picking up, then that's the way it's going to remain for the time being. There's nothing that, there's very little at the moment to inject any momentum into the market. There's no news. If someone said something, and it might do, if dear old Donald got on the Twitter handle, then that might do something. But there's certainly nothing scheduled at any rate. Let's go back to the time again. Oh, sorry, let's go to that. Yep. Sorry, I've just gone back onto the Forex for a minute. This is the Aussie yen, which actually I'm quite pleased I've got this up. Excuse me, I'm just going to switch off for a minute. Myself off when I was reading the question. Apologies, I've just opened the chat box. Thanks for your question, Sam. If you have a way to figure out what is the potential on the right side of the chart, the potential is as I explained earlier on, what you're looking at is whenever you take a position in the market, you are looking at what is this position likely to deliver for me. If it's in Forex, is 10 pips enough? Is 5 pips enough? 15 pips? What is it? But you arrive at that conclusion through the analysis of the chart, not through some predefined risk reward that you have described, written for yourself, which we've seen thousands of times. And I'm sure you've come across them where people say, well, you've got to have a 3-to-1 risk reward before you enter the market. Well, fine. The market doesn't care about your risk reward ratios. It doesn't care about the fact that that's what you've decided. It will deliver what it will deliver. And you have to figure out from the price chart whether what the market can deliver for you potentially, and there's no certainty, but potentially, given the structure of the chart, where you've got price resistance or price support, where you've got heavy concentrations of volume, given the volume associated with the move that's going on at the moment, is that enough for you? If it's 10 pips, is it enough? Is it 10 points? Is it enough? Is it 20 points, 30 points, whatever it is? How much risk are you going to put on the table? Are you trading multiple contracts? Are you trading one? So, and you've got to ask yourself, if I'm prepared to risk a stop loss of 20 points on an index, would I be happy taking 20 points out of the index? That's what you've got to decide. If that's what the chart is telling you, that your risk to reward is 1, fine. You've got a decision to make. You're either comfortable with that or you're not comfortable with it. If you're not comfortable with it, then you'll wait for an opportunity where maybe you've got 30 or 40 points potential. But the point is, it's all based on what you see on the chart. It's nothing to do with anything else. So you look at the chart, you analyze it in multiple time frames, where you get in, if I'm going to get in there, how much is this position going to potentially deliver for me? And there's never any guarantee it will, but at least you're looking at it with some sort of common sense analytical approach and based on what the market has created for you, which is the price chart. So I hope that answers that one for you. Exactly, Lisa. That's exactly what you're doing. It is very much like this. You're looking for, you're monitoring, you're looking for those opportunities which are going to deliver, and it's just a question of being patient. The reason I've got the Aussie yen up here is, as I'm sure you know, the Aussie yen, the yen certainly the yen currency, but the Aussie yen is a proxy for risk. And what you want to see in terms of, certainly from the Aussie yen, if you're looking to trade on the indices and you're looking for risk on, then if the Aussie yen is rising, then the yen is being sold and it's a risk on environment. And if the Aussie yen is falling, it's a risk off environment. That's a very loose description. There is no 100% correlation one-on-one, but generally speaking, if you're looking at the yen complex, which you should be, if you're trading indices, you should have a currency strength indicator, or at the very least have the primary indices up for the yen and certainly the dollar. They will give you a sense of sentiment in the market, and you'll certainly see that through the prism of pairs like the Aussie yen, which tends to be a good proxy for risk sentiment. So at the moment, what's happening on 5, it's had a little bit of a rally. We're starting to see a little bit of a weakening coming into that market, and that will probably be reflected over on indices. I'll just close the chat box again. Just go back onto the indices again, see what's going on. Yeah, it is paint dry at the moment. There we go. But it's not a bad lesson. I know it seems as though it's hard to sit through these phases, and in a way it is, because as a trader you want to be trading. And I guess it's one of the difficulties that if you set your stall out as an index trader, then I'm not saying you can't trade other indices around the world, but generally speaking, you'll be trading some of the primary indices. If you're in the UK, where we started with the FTSE 100, if you're in the US, it's the Three Sisters here. You might trade the Nikkei, you might trade the DAX. But other than that, it is quite and generally speaking, they will more or less be moving in the same direction, generally. When you move to other markets, it's a much, much wider array of possibilities that you have to trade. If you're trading, if you set your stall out as an oil trader, then that's all you trade. That's fine. But when oil is moving in a congestion phase, the problem is boredom tends to kick in. And if you've got nothing to trade and you're not trading other markets, then it's difficult. There's always this balance that you have to play between specializing in something and getting to know that market or that instrument extremely well, and offset that with the boredom factor against trading multiple markets where it's very easy to overtrade. So, and it's you pay your money and you take your choice. It's also somewhat dependent on your personality profile as to whether you can be patient and wait, or whether you like to be in the markets, in which case, trading single instruments might not be for you. But that's something you have to decide for yourself. Anna and I tend to be, I wouldn't say entirely indiscriminate, but we will pretty much trade anything that's moving within reason. I'd say the only thing that we probably don't, I certainly haven't done in any great way, is cryptocurrencies. But other than that, we've traded pretty much everything. Because at the end of the day, the beauty of volume price analysis is that it really doesn't matter what the price chart instrument says at the top, because a price chart's a price chart, could be anything. And if you can read volume and price, then you can trade any market, any time frame. It's as simple as that. And the other beauty of it is you can also blend it. It doesn't have to be our way or the highway. If you want to take, and Anna gets a lot of emails, I can assure you, and that's what people do. They take the methodology and they tweak it a little bit, and they overlay and they blend. They bring in other things on top. Absolutely perfect. What could be better? But at least your trading approach is built on a solid foundation, something which has validity and which makes sense. Not everyone buys into it, of course. Some people think it's hogwash, as indeed they do technical analysis, but there we go. Everybody has the right to an opinion. Everybody has a right way to trade. It's what suits you, not what suits Anna or suits me or anyone else in the world. Yeah, I'm just going to move back to Anna. I will keep an eye on it just in case anything catches my eye. But at the moment, all I can see, to be honest, is more of the same. And again, you're seeing these candles form, these down candles, very low volume on the down candles. You've got doji candles all over the place. Really nothing going on at the moment. And let me pass back to Anna.
I have sorted my profile out for the US 30 cash, which is the Dow on there, and it's all consistent now. And to look back on the Renko here, we can see here up down, the trend monitor flip-flopping out of bright red, trying to pick up some momentum. It had a bit of a go at it there, gone back down, is now gone back into red. The level is fairly clear what it needs to take out to the downside, but it's kind of looking for a reason to go one way or another. There's no fundamental news. The fundamental news that came in wasn't particularly fantastic. And just to give you some context on the price action that we're looking at, and not just on the day, we can see here this, everyone says, oh, what a fantastic, move higher. Yeah, it was great, and they're nice wide-ranging candles. Yesterday's candle was very narrow, but if you look at the week here, this is what we're is it really any surprise? We've had 1, 2, 3, 4. We've had 4 strong weeks of gains, as it were. This is against, if you remember back before, when did it start, all the hysteria back in October, just before December. We didn't have the Santa Claus rally, and this is the big shorts here again, and then we have had a recovery on the weekly chart. You could almost say that's a V-shaped recovery. And is it any surprise that we've now got this move lower, simply because, just by virtue of the fact of the strong move that we've had. And now it's like, as I say, getting this feeling, just using common sense, after something has moved so strongly in one direction, you're inevitably going to get a pause point, some reflection, and you're now going to have some reason for it to move higher, or really say it's all been smoke and mirrors. It's fantastic move higher, but really it was all just as the move lower was overdone. This is now overdone, and perhaps it's come to the end of its of the bullish phase, as it were. It's all about phases of price action and where the price action is in the phase. So is it in a trend? Is it in a congestion? The time frame that you're looking to trade, but at the same time you have to place that within the context of a slower time frame. And just going to see what's happening on the very slowest, going up to the weekly, you could go up to the month. It will also give you these important levels that are there on the chart, and it just gives you a broader picture to help you determine the environment in which you are trading. And it's just something that you will get. It does come to you. You just have to be very open-minded, and by all means fix your attention on the chart that you're looking to take a trade on, but at the same time look beyond that chart. And as I said, and just get a feel for, why is it doing what it's doing at the moment? Well, the chart will reveal that to you. And having a non-time based chart, I've just got Renko. There's no tick. There's no equivalent on MT4 for our tick speedometer. It's just not possible to do. What the ticks tell you is that the number of ticks that are coming through, is it building up some momentum for this move one way or another? I mean, the levels are very clear. This is to the upside, and this is this is to the downside. So as I said, back to where we were last week, we are going to have to be patient. And if we go to the upside, where is it going to be aiming? The first, well, on my chart, I've got this 200 MA on here. David doesn't have any moving averages. I do, because the 200, every trader out there seems to pay, has a version of it on their chart. Not you, I know. And of course, back to the VPOC here, but look at the density of volume on the histogram here. It's going to have to really push hard to get through, but at least it gives you a potential price objective, which is back to 24,546 area. So that's all. We'll leave it there again. I suspect we'll probably get a nice move as soon as we turn ourselves off. Maybe we will make these a little bit later, because at least if we've had a move on the open, a decent move, we can look at it not just sort of masses of volatility candles going one way or another. So that just remains for me, just very, very quickly. And funny enough, Talking Forex seems to have had audio problems as well. Everybody has audio problems today. I don't really know why, but there we are. Very, very quickly, the indicators on, we had a look at the books that are available on Amazon for volume price analysis. With regards to the indicators, they're here at quantumtrading.com, MT4, Ninja, and we've now got TradingView, and it's really brilliant for us because it means that we have indicators that will actually work on Mac and Android devices. So that's been a real boost for us. And what we found actually with a lot of our users is the package users, they have said, oh yeah, they've actually taken the trading view, the option to have the trading views ones as well. They're not quite the same as the ones for Ninja or MetaTrader. It's just because the way that the code is on TradingView, and some other indicators, we haven't got a way around that. But if you do have the full package, or if you have any indicator actually, or package, little bundle of indicators for either MetaTrader or Ninja, and you want maybe one or two for TradingView, what we offer is we offer a 50% discount on those indicators, and we have found that to be very popular. So, if you're on your desktop, the traders will keep the ones that they've had, and the TradingView ones you get 50% off. So it's proving to be a very attractive deal, and you can scroll through the site, much easier to navigate now, and each of the individual indicators here, you can just click on them and you can find the details here. This is the tick volume and the VPOC that we've talked a lot about. What we've done is we put all the resource material together, which is the videos and also the support material as well. And with regard to pricing, you can buy just one indicator, start with one. You can start with, we do called bundle deals, or you can go for the complete package. If you do go for the complete package, one of the benefits is that, well, a huge benefit is that when we develop new indicators for that particular package, they are added to your package for free. So you never actually pay us any more money for additional indicators. And if you start with one or two and you want to upgrade, we will always give you a credit for what you have purchased. And this is the Quantum Renko one back on the Quantum Trading site. Right. Finally, if you want any more information on anything that we have covered, you are more than welcome to drop me an email, anna@annacooling.com, or david@quantumtrading.com. Thank you so much for coming. We have actually pulled this forward from Thursday. I think we're going to do it on a Tuesday. I don't know. It just seems that we had thought actually it's going to be a bit more going on than on a Thursday, but never mind. We are back next Tuesday now, and hope you can come along. Enjoy the rest of the trading day, enjoy the rest of the trading week, and let's see if something actually finally gets a move on. But it's looking very desultory at the moment, but never mind, that's just the way the market is. Thank you so much for coming along, and we'll catch you next time. Take care.